Welcome to the Swing Trading with Cycles channel. We're going to do an update on natural gas today, our weekend update. It is March 4th, 2023. So we have a few months trading in the March candle. And as I posted on Twitter, so far we have a monthly swing low. That's a huge signal. And to be clear, that's a bullish signal. A monthly swing low implies we may have a long-term bottom. Now, we could also have a monthly swing low and then have it fail later and have a lower low. This stuff is complicated. There are no guarantees in markets, but the action is bullish. Take a look at the pinned comment. If you're new to the channel, welcome. You can find the link to follow me on Twitter there. I obviously can't put out videos all the time, but I certainly will send out tweets when there is timely price action. And we are, like, for people, I got the question on Twitter, is it safe to get in now? People seem almost like confused. Folks, it is day 7 of a new daily cycle. This is bullish. And in terms of the word safe, it shouldn't be used in financial markets. You think about risk and reward in financial markets. When we were doing this, the risk reward was very poor. Once we had this swing low, which we discussed on this channel, and again, like, just you want to make sure that you're following the tweets as well. We made our swing low on this day. That was day 1 of the new daily cycle. And then that next day, we gapped up above the 10-day moving average. We came down, didn't fill the gap completely, but then reversed. That gave you a stop. Like, just to be like super clear, like, or a clear example, once it did this, didn't fill this gap, like, you can see this gap is still open, just slightly, which means it probably gets filled on the way down. But it held this. That, for instance, becomes a stop loss level. That's you just have to choose it when the risk reward is right for you. And the point there is, once you have a monthly swing low, that means, so to be clear, and there's a whole video on how swing lows work if you're not familiar with that, and swing highs, which is very important. Swing highs are how a downtrend begins. Swing lows are how an uptrend begins. Another way of thinking about it is a swing high ends the uptrend that the swing low started. So things move from swing low to swing high. And so once we had this swing low on the daily, because we got this follow through on the daily chart, we're now on day 7 of the rally. We got this swing low on the weekly. Look at that beauty right here. That's what we got this week, and we closed as a swing low, which is important. You need to obviously close above that level, hold it, and now we have. So to be clear, so this is a bit more complicated. Like, this candle is the one that marks the low. And so we needed to get above the high of this candle. And that is at 2.587. So that, just again, to just be like really spell things out, that's an important level on the downside. On some kind of pullback, 2.587 is going to be important, because below that level, we no longer have a weekly swing low in place. And just as we're on day 7 of a new daily cycle, this is almost certainly this was week 1 of a new weekly cycle. So notice we just had a little 4-week rally that ended after. So remember, swing high to swing low. This swing high on the weekly is what started this massive downtrend that we've been in, which just ended as of last week, when we made this low and we held it. As of this week, we closed above the high of the candle that marks the low. Again, that marks a potential bottom. And very exciting, as we talked about on the previous videos. And we'll also look at Boyle and UNG, as we always do, to see the equivalent levels here. If you look at the 2-week chart, which is a nice little interesting, like, it's helpful to look at charts on different time frames, especially if you're familiar with price action and structure, so you can see the swing highs and swing lows. We just made a massive swing low on the 2-week candle. So this is where every candle is 2 weeks of price action. So if you think about it, it's almost like it gives you a preview into the monthly candle. And so above 2.623, we have a 2-week swing low. And so remember, the weekly swing low is above 2.587. This is at a slightly higher level because of the structure of the chart. And this is a more important signal than the weekly, because again, this is telling you what is more likely to happen to develop within the monthly chart. Because we have a very new monthly candle, obviously, in March. And so this candle actually closes at the end of next week. So each candle is a 2-week period. So this nice, beautiful green candle we have here was this current week, which was this green candle. I hope you're following, right? And so next week, this candle will either push higher and make that 2-week candle move higher, or we'll get some consolidation and this 2-week candle will start to grow a upper wick. And, worst case scenario, we get a crazy pullback and this 2-week candle goes red. That would happen below 2.65. So below 2.65, this thing would go red. That would obviously be a pretty big pullback. Now, the thing that you see very, very clearly on the 2-week chart, I hope you see that. It's just like it wants to test that pivot. That's $4 basically. 380 a hair away, but that's a nice bit of upside from here. Doesn't mean we definitely get up there, but it gives one a potential target and important mile marker, if you will, that, okay, maybe, and this is this your 10-week moving average? That's right. So this is your 10, this line here is your 10-period moving average. So the way to think about that is, it gets a little bit more complicated. This is kind of like a 20-week moving average because each of these periods is 2 weeks. And so the bullish scenario is that at some point we're going to close above this. Now you can see this is obviously sloping lower, so it's getting lower with each passing day. So when we do cross above it, it'll be lower than where it is now. Right now it's at $4.40. And if we go back to the weekly chart, more importantly, look at that. We almost closed above the 10-week moving average, and we talked about how eventually we're going to do that. Right? And I hope you're noticing the pattern. It's all about the multiple time frame analysis. Something happens on the daily chart. If you get follow through, it happens on the weekly. If you get follow through, it happens on the 2-week, the monthly, the quarterly. And we're going to look at the quarterly chart. That's the real bull case. Or I should say, if things get really bullish, it gives you something to hang your hat on. Because what you want to do is focus on levels versus getting emotional. Like, oh, we're up a lot, like 10%. It's like, well, who cares? What does that do to the structure of the chart? Did that make a higher high? Did it make a lower low? That's so important. So the 10-period moving average is $3.04 about. So we didn't quite get there, but we're really close. And so you imagine we're going to close above that probably next week. That's going to be another important signal. And the other thing to keep in mind in terms of like how long this could run, if we go back to the daily chart, we're only on day 7. Now remember, we had 2 periods where we had this little feeble 5-day rally and then we collapsed. 5-day rally and then a collapse. So we're obviously not going to have a little 5-day rally and collapse. We could still collapse from here for sure. I suspect we're going to get at least a 380. You can see just structurally, and it's also important to keep in mind that level. Look how we kind of consolidated a little bit in that zone. So it wouldn't be surprising to see price come back to that, like bounce back up there on this like short squeeze, whatever you want to call this. But after this massive move lower, this is not surprising. So, and just like for reference, looking at past rallies, look at this rally. That was 22 days. This rally was 15 days. If you combine this rally and this rally, right, like you discount this move down, this is actually 26 days. But like even just individually themselves, this is 15, this is 11. That's a 20-day rally. This is a 37-day rally, depending on how you want to think about it. So we could have many more days of upside and several more weeks. Because again, that's important to just kind of notice. This was a 7-week rally, which was bearish, 11-week decline. 4-week rally, 12-week decline. So now the question is, what kind of pattern are we going to get here? Are we going to get another 4-week rally and then a long decline? Even if that were the case, again, this was just week 1. All this to say we're early. This is good. This is the time that the risk reward makes sense. Not necessarily. We probably get some kind of lower time frame pullback, and that's your ideal entry. But this is where the risk reward is good. And I know there are people that are in. We'll move to Boyle because I think that's where a lot of people are in. We'll talk about those levels. But look at this monthly chart. And if you're new to the channel, welcome again. This is game changing stuff because it's, again, instead of relying on emotion, just be like sort of arbitrary, like, oh yeah, we're up a big percentage, or like, no, not at all. Look at In order for us, like, look at this massive rally and then this crazy decline. This is your monthly chart. In order for this crazy decline to be over, we need to make a low. We need to make a swing low. And right now, right here, we have that on the board. Now we have to close there, and we obviously have a lot of months to go. But look at that. Look at that structure. This long candle leaving potentially this really important low behind. Now, I'm not a fortune teller, so I can't tell you, yes, the low is in for good, or no, this is just a bear market rally. Who cares? You don't need to predict things to make money here. We're in an uptrend. You understand how to read price action. You use your stops. There's a lot of money to be made in oil potentially here. And when it flips around, if it flips around and this kind of cascades into a lower low, there'll be a lot of money to be made in coal. But just I want you to see this structure. I mean, first off, this month went green right at the end of the month. That's important. This thing was a massive red candle at one point. And so if you think about the structure of this, the next logical move is to 445, right? The high of this candle, right? Like, you see a world where this candle fills out, like, because we have to make a higher high above that to start to make progress on a monthly chart. And maybe it doesn't happen all the way in March, and you get that move up in April. April is statistically the best performing month for natural gas, as we often remind. We can just kind of look at that real quick. Like, so it's not like that actually starts to line up. So again, we've looked at this before. April is by far the winningest month for natural gas. We're looking at UNG as a proxy, the 73% win rate. So it's not and this is just kind of a coin toss, Marches. So it wouldn't be shocking to see that we get a big up move in April as well. All that to say, you gotta stay. You can stay with this trade because a lot of people will be screaming, "Oh my God, it's run too far, too fast." And it doesn't mean there won't be pullbacks along the way, but just remember we had this crazy decline, and so we could get. And also remember, we could rally all the way up, make a higher high above this month, and then still collapse. That's it on the table as well. And if we think about the quarterly chart, you can see the bullish scenario here is the quarterly chart going green, because we're red here, and the open price was $4.39. And so if we can get above $4.39, that would go green on the quarterly chart. So all of this is triangulating around that 440 level as an important upside level potential, again, bullish case. So that's going to be really important to kind of watch that level to the upside. And we'll talk about what is that equivalent level on oil. That's the exciting thing. Okay, so that's a very good reference point. And if we actually also look at the yearly candle, so the year opened at, oh, right, yeah, because that's an important kind of concept to get as well. The quarterly candle and the yearly candle are the same at this point because we're still in Q1. So, right, that's another important piece to this, right? So if there were a scenario where the quarterly candle went green before it closed this month in March, the yearly candle would also go green as well. That is uber bullish. I mean, that is we had this big move up and then a big move down. And now if this red candle goes green for the year, again, this is an annual candle, big signal. And then obviously this candle doesn't close until the end of the year. So a lot of price action to come. And finally, let's look at the 2-month candle. Now, notice we're surrounding this trade. And the point here is that if you know what you're looking for, if you understand the market structure, this all becomes eminently useful. So this is now, every candle is 2 months. And this candle here, is the month of February, and it closes at the end of March, right? And this month was December and January. So you can see this was a really ugly month, December and January. This was also an ugly month, or ugly 2-month period. This was October, November, also ugly. So we've been falling for these last 3 2-month periods. And now we're an inside month. We're an inside candle, basically smack dab in the middle. right? We're well off the lows because we've rallied massively since we fell below $2. But we're still off the lows, off the highs, and again, all goes back to that same level, that 445 in the neighborhood. And so you could see a world where this candle fills out like that. And if and when that happens, that's a big signal because that's telling you what the quarterly is likely, or if that happens, that would also mean a reversal on the quarterly by definition. So without further ado, let's get into Boyle and UNG to see what those equivalent levels are. We'll start with the highest time frames. And of course, we know natural gas can go back to all-time highs. Boyle will never go back to all-time highs. That's important to know, to understand. But we do have a monthly swing low in place for Boyle. I mean, look at this thing. I'm just like, if you understand how to look at a chart, this is super bullish. We are just making this higher high here. So again, so for Boyle, that's above $7.09, and we're up here at $8. And so there were lower time frame signals, obviously. This is just the confirmation because those lower time frame signals continue to get follow through. And so the bull case for Boyle gets you to 16, almost 16 bucks. That's the monthly chart. How does it look on a 2-month? Again, same thing. It's not surprising. It's the same exact pattern as natural gas itself. We're an inside candle on this 2-month chart. That's obviously a double up from here. The more near-term level, though, and let's just look at the quarterly. So it's going to be your same deal. The quarterly goes green above $15.16. That's and we're here at $7.86 is where we closed on Friday. Let's look at the weekly chart. That gives us a little bit. The structure is pretty clear there. So you can see this was actually a gap down week. And so that's your 1573 level. So you could see a world where it actually gets to 1573 and then actually fills the gap there. And speaking of gaps, let's go down to the daily chart and we can see a couple of gaps. So like here's a gap. Let's get rid of this line. So there's a gap here. Right, that's above that 1573 level. And before we get there, are there any gaps below? No, I think these are all pretty much filled. So that's going to be interesting to see if we do make it to the $15 area, then it tells you we could have a rapid move directly above it. Again, we have to remain nimble here, especially if you're trading Boyle, and make sure that if you're not taking profits at this level, well, it depends. I guess we'll have to see how we'll have to see what the price action looks like at that point. And I didn't mention this for natural gas, but it's the same principle. I keep saying, watch for the higher lows. So we just had a big move up on Friday, very nice big move. I would say at this point, the low from Friday is that, what is that, 693, right? So that tells you like ballpark sort of line in the sand. That's your daily chart. If we go to a lower time frame, like the hourly, how did that look on closing? Oh, nice. So it's bull flagging on the hourly chart. So on the hourly chart, you really want to kind of stay above. You ideally wanted to kind of bull flag above this level here, like that 765 level. That said, you could easily see this thing undercut, even come back to like 650, and it'd still be perfectly healthy. I mean, just observe this uptrend on the weekly, on the hourly chart. But this move here is a little bit extended, so it wouldn't be shocking to see something like, well, if we, we're not going to draw every squiggle here, but that wouldn't be shocking to see something like that before another move up. But we could also just keep going up. We're obviously in a squeeze situation, and so the point is, I said this before, make sure that your position size is such that it allows you to stay with the trade and not get spooked out, because this thing is a wild trader. But we could be heading to around $15, which would be, let's just make sure that let's just quantify that right here, right now. Say we head up to there from here. Yeah, another 88% from here. That's pretty nice. So definitely looking promising there. Again, obviously same count as natural gas itself. And so let's just look at UNG to see those equivalent levels. So again, monthly. So UNG was actually able to close more bullish on the monthly chart last month. I mean, look at this hammer. Beautiful hammer. This was a crazy green candle. And so the level for natural gas, that bull case, is 1341 to get above this high here. That's on the monthly chart. And you can see that's still going to be your same level on this 2-month chart. We're just an inside month. I mean, this is going to be a beautiful thing to watch as March unfolds. Like, does this candle keep going up, 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 right? Like, even though the rally may seem crazy, like, oh, it's going for a long time, it's like, have we made that high above 1341 yet? If we haven't, then there's probably still some more upside. And once we see how we react when we get up there, that's going to be super important as well. And that your open level on the quarterly is 1281. So these are slightly different levels, but all quite a bit higher from where we are here. So we go green on the quarterly chart above 1281 on UNG. That's important to know. Did we talk about what that level was for Boyle? So Boyle goes green on the quarterly chart above, that's right, $15.16. So those are nice levels, and you can see a world where it goes back green. We do, green quarters exist, even if we're going to get a lower low here, and the reverse is true as well. If we're going to get, we'll go back to UNG. If this is just a massive lower high before another lower low, then we will also have a great short opportunity, which you could use cold to play. And so it's the same pattern for UNG as natural gas. Didn't quite close above the 10-week moving average, but we would expect that it will soon, or like next week most likely. And speaking of cold, let's just move over to that. Let's see how that bearish case is unfolding. Right, so it's exactly what we would expect, where we get our swing high on the same day that we print our swing low for natural gas, and we've continued to fall. And in terms of, actually, I will go back to natural gas and we'll close out with this just as a way of kind of quantifying how far we've come and sort of how far we have to go in a sense. So if we're talking about the decline from this daily cycle high, so like from this swing high to this swing low, let's just see what was the decline. So, and this isn't the decline from all-time highs. This is just from, just looking at a daily cycle level. So that's a 71% decline, more importantly, about $5, so 5 points, which means we'd have to go up $2.50 from the bottom to retrace 50% of the down move. Now, I'm not talking Fibonacci's here, notice. I'm actually more so like, this is more of just, think of it as a retracement, like in the broadest sense, because that's what price does. Well, when we make a higher low, we're just retracing. When we make a lower high, we're just retracing. And so what we want to see here is, are we making a move that is high up? Like, it's like, have we gone up high enough that it looks like this isn't just a bearish retracement, if that makes sense? So that's $5, about 5.123 in terms of the downside. And so how much have we rallied here? So we've rallied just about a point, right? So we have retraced 20% of the move. So nowhere near even 50. So a 50% retrace of the move would get us to something like, oh, well, what do you know? Isn't that funny? It would get us to about 440, right? Like in that neighborhood, which is the level we're talking about on those higher time frames. That's not a coincidence. And again, the point there is, we could see it could retrace all the way to 50. There's no reason why. And I'm not saying, if it gets to 60%, then it's going back to it's going back to that pivot up there. But it just gives you a frame of reference that, like, we could go up significantly higher from here and it could still be bearish. But more importantly, we can make a lot of, like, look at that. That's a 46% move from here. And that means Boyle could do a lot more than 46%, obviously. So looks like we could be setting up a nice month of March for natural gas, and maybe even a nice month of April to follow that. The beauty of it is, like, if you found yourself in this downdraft and you're enjoying this upswing right now, just remember how nice it's going to be next time when you can avoid the move down in the first place. That doesn't, and looking at Boyle here, it doesn't mean you catch the Pico bottom and you're able to buy it at $4.34. But again, just not to belabor the point, we made a swing low on this day. It was an ugly swing low. And we talk about that. Look at this upper wick. That's not super inviting. But then we made another move up. Okay. And remember, this actually had a little bit of a retracement. And then it held that move and it went up. Like each of these wicks is a move lower and a potential spot to get in and then place a stop. Right? Even if you wait for the close, right, these wicks are telling. It's like, well, if price retraces below that wick, we're probably going much lower. So that becomes your sort of risk point. And so notice it actually took 3 days to close above the 10-day moving average. So as I always say, if you're waiting for moving average crossovers, you're probably not going to get into the trade as soon as you can. But that doesn't have to be the worst thing, because we did talk about how there have been so many fake outs on this thing that maybe the cautious thing to do would be to wait. But notice, even if you did that, you waited for the 10-day moving average close, we've still gotten upside from there. So all that to say, this is presenting the right risk reward, and you don't have to buy during this crazy move down. Like, look at this, how many days it didn't close below the 10-day moving average. And you hear about people averaging down. Like, people are in for since like well above $10, right? Like, even if you bought it in at 10, you're still down 20% right now. So all that to say, as we watch this furious rally, this rebound continue, this is just learning lessons for later when you can really maximize those gains, because you're not just trying to win you're not just trying to make your money back that you lost during this decline, that like maybe you got in on this candle, right? Like maybe, like, again, not saying you get in here, no one can get in here consistently, but once you recognize there's a swing low on the board, now you know the risk reward is in your favor. Let's ride this trade. Let's see if this bad boy gets to 15 and then what it wants to do from there. We're going to leave it at that. Natural gas has finally gone bullish. Let's all embrace it. Happy days are here. For now, if we get a violent reversal, we're going to want to jump onto cold here. But we'll get to that. We'll cross that bridge when we get there. That's the update on natural gas today. Thanks for watching.